Early market action this morning didn't seem to quite know what to do with what was a pretty darn good PCE report. But now they seem to be getting it that the Trump methodologies, the Trump economy, if you will, that really started with his election. Once the election was confirmed, the optimism started growing. People started getting excited. Obviously, all the chaos that I've been talking about, all the confusion and uncertainty that's out there is impacting everything. But what do we need it to impact? We needed to impact the interest rates, not the Fed interest rates. They set those. No, it's the market interest rates that we need to come down, which they are coming down. And spending is coming down. Anyway, we'll get into all of that, but I would say that overall, this is a pretty optimistic morning, and the markets are starting to reflect that. Even Nvidia is up, even with all of the comments by Jensen Huang that obviously are causing that stock to have just fallen off a cliff recently. I know, just kidding. Okay, so let's go ahead and take a look at the Tesla news here. Let's start off with AJ. AJ says that he's been doing some very deep studies here. He says, I have a bit of good news, but I do have to add a health warning. Okay. He says his current modeling suggests that there's a material sequential margin improvement in the first quarter on Tesla Automotive's products. Despite the capacity underutilization, significantly reducing fixed cost absorption, fixed cost embedded in the cost of goods sold. So in other words, the overall, the factory and all that stuff, if you don't make as many units, then you have more cost of goods related to that overhead. And his higher Model Y production costs because of the switchover. It appears that my new Model Y's impact on mix is enough to lift margins. This result is based on number one, approximately 500 line ASP model, which considers different prices, trims. So in other words, he's got a model that has 500 lines of information that goes into the model. And it takes into consideration different prices, different trims, different volumes across China, US, Europe, and including taxes and tariffs. Everything is in there. And he says the second 300 line cost model, which accounts for different production costs in China, US, and Germany on a per model basis. These models are calibrated, he says, on historically disclosed numbers and rolled forward into the first quarter of 2025, and they reflect sequential cost improvements and other factors. He says this is the first time he's used these models since prior quarters didn't require this level of granularity. However, this time it was unavoidable. All right, so this is what, and AJ's been talking about this for several weeks now. It's one thing that the unit sales might be down in the first quarter, okay? And this is already probably baked into the price you're now seeing in Tesla stock. But what the market is not going to be expecting, they're not going to be expecting a big margin improvement. They're not going to be expecting what I'm suggesting will very likely be an increase in energy deployments and maybe and some good profits in that category. And we could also be picking up some FSD revenue, well, not revenue, recognition of profits on FSD out of China and the United States. There's a whole bunch of good news that could be coming in the first quarter that could kind of shock the market. Okay, this is from the son of Walkie. Breaking, Elon Musk responds to Tesla stock being down and says the long-term outcome for Tesla is very high. Lots and lots of reports from China that FSD is super solid there. Here was a particularly interesting one. Now, for those of you who are catching up, Tesla released FSD. They don't call it FSD in China, but they released it in China a couple of days ago. It's exactly what we have here. I did see reports that the hardware 3 might be coming out next week. The hardware 3 version. Right now, it's only the hardware 4 version. But anyway, lots and lots of reports. But I found this one particularly interesting. Zhongwen 2005. Tesla FSD after 3 days of numerous video test comparisons. This is by far the most pertinent and honest evaluation by industry professionals. Tesla FSD experience lags behind other car companies in China, mainly because of the lack of adaptation In other words, it's not adapting to localized infrastructures and traffic regulations. So it's lagging because it's not localized yet. But, and there's the big but, we see the horror of FSD's basic strength. What's the horror of basic? I don't know what that means. I don't know what he means by that. The horror of their strength far beyond, read it again, far beyond other car companies in China. Number one, the most accurate perception of static objects. Two, the peak of dynamic perception ability. And three, gaming ability, response speed, vehicle control, far more than expected, is difficult to compare with the current car companies. In other words, it's just that much better. All right, so then we have this from Zhongwen 2005. RBC Capital maintains its buy rating and its price target of 440. So 440, realize that this is over the rest of the year. But that's good that they're coming out and saying, look, whatever's happening with the stock right now, we still think stock's going back to 440. Of course, I think it's going to 700 plus. Sawyer Merritt, news, the lowest cost variant of the refreshed Tesla Model Y launch series is sold out in Australia. So, these Aussies are paying attention to all this, political news and all this unhappiness, with Elon Musk and with they're kind of liberal down there. Yeah, like seriously nasty liberal. We saw, anyway, without getting into the details, Australia, apparently it's okay. They're going to buy the Model Y. I'm so interested to see how the Model Y's early sales are in Europe. Dalton Brewer has this. He goes under the handle of Dalty Brewer, or Dalt Y Brewer, Dalty Brewer. Breaking, Tesla has been aggressively hiring for Optimus, their humanoid robot. Currently, there are 70 job openings. 70 job openings. Holy mackerel. And that's after all the hires they've already done. I mean, if you got 70 job openings, now these could, I don't know what the details of. I shouldn't even speculate. All right, this is Randy Kirk. Please hit the like button. Go ahead. I'll wait. Subscribe, hit notify. Later on today, Larry Goldberg, and then Phil Beisel. Oh man, Phil's got some very cool stuff for us this week. I think you're really going to like it. We'll have more Cern over the weekend. I'm probably going to have more Brian Wong over the weekend because he's got a bunch of stuff on his mind. All right, and then of course you could join Patreon. That would be a huge help. The Federal Reserve's primary inflation rate, the core PCE price index, fell to a 7-month low in January, matching the lowest level in nearly 4 years. Let's have some applause. Clear disinflation progress couldn't come at a better time when it will give the Fed more leeway to respond to economic weakness, despite inflation risk from Trump's tariffs and tax cuts. S&P 500 futures are higher early Friday after Thursday's sharp sell-off. Well, they were higher, then they went lower, and then they came back. Okay, now, the personal income and outlays report from the Bureau of Economic Analysis also showed that consumer spending unexpectedly turned negative. All right, personal income surged, but, okay, so personal income surged 0.9% in January. It was expected to surge only 0.3%. That wouldn't be a surge. That would just be an increase. Surged 0.9%. That's like over 10% a year. The Bureau of Economic Analysis showed that the increase in personal income reflected increases in government benefits, such as Social Security, higher compensation, good, and higher dividend income. The combination of lower spending and higher income is positive news. That's me talking. In the short term, as this should, what? It will increase savings. It's got to go two places. If you have way more income and you're spending less, it's only going to go two places: into reducing credit card debt, or it's going to go into savings or investment. So the S&P futures rose 0.3. The 10-year treasury. Okay. Personal consumption spending fell by 0.2%. No, so you didn't have it flat. You didn't have it just going up a little. You had personal consumption spending actually falling And that was after a strong gains in December. So people blew out their checkbook in December on gifts and travel and all that kind of stuff. And then they closed up. They closed it up in January. That is not unusual, but having that kind of increase in income and decrease in spending, this is it's a 1 month deal. We'll see what happens next month. But I think that's the markets this morning were like, wait a minute, what happened with that spending? What, we don't like that. Personal spending was down, should be of some concern, and follows from the lowered confidence of optimism that showed up in earlier reports that we've been showing here. Obviously, if this becomes a trend, it can result in a recession because consumer spending is 60% of the economy, and the government spending is not going to make up the difference this time. All right, so this is what I've been saying. By the way, that's all. That was not an article. That was all what I'm saying. This is what I've been talking about. Okay. If consumer confidence goes down, okay, and if you have people that are a little nervous, and you get the WIX now over 20%, all of that is going to cause contraction of spending, okay? So this is not something that people would predict months in advance or at least weeks in advance. Anyway, I think we're going to have at least a quarter of very low GDP or maybe negative GDP, and maybe 2 quarters of very low GDP or negative GDP, maybe even 3 quarters of low GDP. All right. I don't see any way of getting around it. All the nervousness around tariffs, and maybe Trump's doing this on purpose. I mean, he needs those bonds to go down, and you need to get your recession out of the way very early in your new administration, so that then you can start building back up again. This is the normal. This is so normal over centuries of the way things happen. Is to the smart presidents got the recession out of the way early. So you've got government spending going down. You've got layoffs at the government. Lots of layoffs showing up now in tech. You've got nervousness in terms of the consumer. The consumer is pulling back, not spending. All of that can lead to a recession, or at least to a very flat economy. And that will be good because it'll get those bond rates down. If you get the bond rates down, well, I've been saying this for days. This is like a perfect scenario. And maybe the recession is 1 quarter, and maybe it's like 0.5%. I mean, it doesn't have to be big. It just has to be flat for a while in order to get those bonds down. All right, both the headline and the core personal consumption expenditures price gauges rose 0.3% of the month, which is exactly as forecasted. Headline inflation eased to 2.5, while core inflation slipped to 2.6 from 2.8. Core inflation matched the lowest level since March 2021. So this also gives the bond market an opportunity to reduce. If you got lower spending, you got a contracting economy, you got the government, the 𝐑𝐚𝐽 thing working, and you've also got core inflation coming down. We can be headed toward that 4%, hopefully. All right, we'll look in a minute and see how it's doing this morning. According to Owen Gregorian, 𝐑𝐽, the DC layoffs may top 1 million. Recession risks soar as jobs and housing sour. This is from Zero Hedge. The Trump administration's epic purge of federal workers is shaping into one of the most significant job cuts in a generation. Early indications suggest Northern Virginia, Washington, D.C., and Maryland may be in the beginning innings of an economic downturn as jobless claims rise and a surge in active housing listings signals a very ominous outlook. On Thursday morning, Torsten Slok, S-L-O-K, chief economist at Apollo, joined Bloomberg TV warning the consensus expects total 𝐑𝐽-related cuts to be 300,000. However, studies show that for every federal employee, there are 2 contractors that end up not needing to work or getting their contracts cut. As a result, layoffs could potentially be closer to 1 million, Slok noted. New job market data this AM showed that 𝐑𝐽-related layoffs are beginning to filter through. Now comes the tsunami. Dominic Constam, head of macro strategy at Mizuho, added Doge-led recession risk. The market is focused on a negative economic fallout from federal spending cuts. The level of potential federal job losses is too small to derail growth, but overall government spending, what I've been saying, has been egregiously high in recent years. There has been an excessive job growth in the government sector, including federal, state, and local government, as well as education and health. If Doge sets a precedent on jobs and achieves spending cuts that ricochet through the quasi-public sector, it is likely that new economic headwinds will develop. Earlier this month, Bank of America Michael Hartnett commented, Washington, D.C. recession begins. New data from Bright MLS, one of the most extensive multiple listing services in the U.S., shows D.C.'s active listings continue trending around 25% compared to the same week a year ago. That is up 4% from just even a week ago. D.C. active listings are trending well over levels seen in the past 3 years and could be ripe for much more upside as Doge layoffs continue to ramp. Active listings in D.C. with price decreases are also on the rise. Kylie Cox, chief marketing strategist at Ritz-Holt Wealth Management, called the situation unfolding in Virginia, Washington, D.C., and Maryland largest job cut in American history by a mile. That's a prediction. It's not a reality yet. Elon Musk says this morning. Imagine if you were suddenly appointed AG or head of the FBI. You were just thrown on a ship with a hostile crew. Until you appoint some new crew members and figure out the ropes, you can't steer the ship effectively. It's literally impossible. So as we watch Pam Bondi, as we watch all these folks across the board, it doesn't matter. It's not just the FBI and the it's all the departments. It's these people have to get rid of this deep state, and they're going to have to cut a couple of layers down before they can be confident that they have loyal people. AJ, we started with AJ. Let's end with AJ. He says, I estimate that NVIDIA is now at a 25 PE and a PEG of just 0.52. This is clearly now cheap territory for a high-quality company, which is the undisputed, and the complete leader in a key industry. Obviously, a strong buy recommendation at this price. I guess that's investment advice. I don't know. It isn't my investment advice. I'm not buying any NVIDIA, but I just thought that was interesting coming from AJ this morning. All right, where are we? Where are those markets right now? So they have turned positive, strongly positive. So they got some momentum, and now things are going up. The Dow is up 0.858%, NASDAQ up 0.72%, S&P up 0.60%, Tesla up 3.65% to 292. Apple. So you see, it seems like Tesla now is at like a 3, a 4 on the beta delta rather. The delta, it's like 4 times the NASDAQ, 5 times the NASDAQ, swinging down and swinging up. Anyway, so Tesla up 3.69 at this moment. That is $10 to 292. Apple is up 0.34%. NVIDIA is joining the crew this morning, up 2.54%. Meta up 3.69. Only Microsoft is down. They just destroyed Skype. They just eliminated Skype. Skype is gone. Well, not gone. It's going to be blended into their, I forget what they call it, meetings or something like that. Anyway, and then we've got the Cathie Woods all up except for TDOC, which is barely down, just slightly down. So the markets are very happy this morning with that report. After it took them a bit to figure it out. All right, now let's go ahead and take a look at that really important one. What's happening with the bonds? The bonds are down 3, still sitting above 4.25. I need it. It was below that. It was at 4.24 earlier. So, but it is down for the day, down for the week. It's been down every single week since Trump took office. This is a very, very good, directionality. All right, we've got oil also down this morning. We have got Texas Intermediate is down 91 cents at 69.44, staying under $70. Brent at 73. The $4 thing is a little bit smaller, not quite $4 this morning. Natural gas down just a couple of cents, but under $4, staying under $4. And what about gasoline? Gasoline is under $2, getting very, very close to it being at uh, a low for a year at least. Could continue down and get to the point where it is the low for this year, or for the last 12 months, for all of 2024 even. Okay, we have got then gold is down another 42. So gold is saying, all right, what is gold saying? I'm not really sure. Why has gold dropped so much? Maybe it was just out over its skis. So it's now 28.53, way off the almost 3,000 that it was a week ago. Silver off 1.79% at 31.5 after being very, very close to 34 a couple of days ago, few days ago. Copper down 1.92%. That's a very strong move on copper's part, now at $4.53. You've got Bitcoin actually up this morning after crashing this morning, continuing its crash. It was almost into the 70s again, but now it's at 84,127. And you have got that's it. That is everything. Okay. I've seen a whole bunch of headlines flashing across my screen while I've been talking to you. But anyway, none of them I could report on right now. So, Ryan, no, Cern Basher last night. I'm going to put both of these up. I got Cern Basher last night, which of course you're always going to want to watch. And we've got another Cern coming up tomorrow. And we also had the Jeff Lutzen, and our regular, he's normally on Wednesday, but it was on Thursday last night. Jeff and I had one of the best sessions that he and I have ever had, covered so much territory. If you didn't watch that yet, I'll put the card up, and also the Cern Basher card. Coming up later today, as mentioned, we've got Larry Goldberg, probably around 3:30, 4 o'clock. And then, Phil Beisel. Phil Beisel will be on tonight, and he's got a bunch of stuff. I've already seen what we're going to talk about. It's going to be fantastic. That'll be at 7:45. Okay, so let's take another look here. Tesla now up $9.05 at 291. So good, strong day for Tesla. Good, strong day for the markets. What do you want to call it? It's a good news Friday morning, and then hopefully Larry and I can report good news Friday afternoon later in the day. I will be looking forward to talking to you. It's been great talking to you this morning.